Good afternoon, friends. I hope you are having a good Sunday. Now, this is a weekly wrap of for the week uh, ending 25th of September, plus also a trade plan for the next week. This was originally intended for our webinar participants, but I have decided to make it open for everybody because the markets, quote unquote, are at a important juncture. So I would like everybody to benefit from what I have to say. Now let's start with the S&P 500 and how it closed on Friday. Uh, Basically, now this is the S&P 500 chart, and as you can see here that we have the Fibonacci levels plotted out. Now the 50% of the entire decline is about 3400. So 38% decline is about 3352. So this 50-point zone, in my opinion, is very important. This is where this pullback, which has started on Friday, should end. It also has the 20-day moving average. So lots of resistance is coming into this area. Overall, the time is not right according to me for a fresh move to start. So my sense is that one excursion towards this 200-day moving average is likely on the S&P 500. On Nasdaq, again, it's kind of outperforming, but still, these dome type formations are not the most positive. So if another round of decline starts again, this 9600 zone could come into play. So having said all of this for the US indices, now we get to the dollar index. Most important, it drives flows into risk assets, particularly important for markets like India. Again, an excursion towards 97 looks like it's building up. Because of the uncertainty, people consider dollar as a safe haven. So this is going to push our markets lower. Now let's talk about the Nifty. Again, we have our Fibonacci levels plotted here. 50% of this entire decline is 11,290. 38% decline is 11,170 to about 290. So this kind of zone comes into play. It also has the previous short-term bottom of 11,180. So as you can see that this entire zone from 1100 right up 11,100 to about 11,250 is an important zone. We'll look at it from several perspectives. Now let's look at the weekly chart of the Nifty. Very strong downside on weekly, so it's very clear that on a weekly basis the market trend is down. On a monthly basis, for the first time in many months, we are going to have a down month in September. So the weekly and the monthly pressure is on the downside. Now let's see what kind of interesting levels have come directly from the chart. See, these are the support and resistances that I have drawn. I have used a very simple methodology. All these levels have been taken from these gap downs we got from the March decline we had. So first of all, you have this gap down. This has given you a level of 11,470, 11,560. Again, this one here has given you a level of 11,307 to about 120 to about 11,240. Okay. Then you have this zone here, which is about 11,690 to 11,872. And finally, you have this 10,150 to about 10,280. Whether or not these levels come, it's nice to have them plotted, because the issue is that they become relevant all the time. As you can see here, these levels are getting hit here, here, and now it will become a resistance as we move up. Okay. Now, what is the broad view? The broad view is that the action last week had very, very strong momentum. It is unlikely that we have made a bottom at 10,800. It is a pullback which will shake out short position, will probably reinstate some long positions, and I think this head and shoulder is now active, and this is where we have our neckline. So we will, chances are, break through this and move lower at some point. And we can get up to these zones where the market could find a bit of resistance. What zone is this? This is again 11,250, 260. This is the neckline. Okay. So this is as far as the Nifty is concerned. Bank Nifty, we have events like Supreme Court judgment, etc. Now people think that that judgment is going to change something. In my view, this is a structural decline on banks. If people are going to be allowed to not pay back their loans, interest on interest is being disallowed, this is money moving out of banking. Sure, you can have a pullback rally, maybe till about 21,500, 700, but I think this will finally go down. Okay. This kind of decline is not a correction. This is a bear market on banking. Okay. And IT, pharma, etc. They can delay the inevitable. But my sense would be that if the financial sector is weak, you will have weakness in the market. Okay. Now let's have a look at the similar support resistance zone on Bank Nifty futures. Again, these are historic levels where market has found resistance. Okay. As you can see, these levels hold up at several points, and that is how support resistance is measured. You can do your adjustments because support resistance is not a point, it is a zone. Okay. So basically this kind of zone is what you have to be looking at, where the maximum number of points are coinciding. So we have upside resistance right at where we are standing, 21,151 to about 21,416. You have downside support at 20,100 to about 20,430 thereabouts. And then once you cross this zone, you could have a rally back till here because Bank Nifty is quite overstretched. So maybe we could have some more pullback on the Bank Nifty. Now Bank Nifty spot chart, here the 50% zone is about 22,800. The 38% zone is about 22,100. Somewhere in this 30 to 50% style zone, you could have a pullback on Bank Nifty. 30% is more likely because it is very, very weak. So I would think 21,700, 22,000 is the area from where the Bank Nifty could also begin to reverse. Whatever the judgment comes in, this is in a huge structural decline and it's going to come off fairly strongly. Now let's look at the weekly chart on Bank Nifty. Again, down for 4 weeks. Monthly chart, again, the entire month of August has been cleaned out by this massive 4,000 point bar. So the pressure is on the downside on the larger time frame. So let's not be under any confusion because of 1 day's worth of rally. Now what I want to do today is look at several sectoral charts and see what is happening to them on a weekly basis. This is the Nifty metals chart. Fairly strong downside week. Okay, you can look at Nifty Pharma. Nifty Pharma again, while it looks strong on Friday, etc., this is a at least a pattern which shows that there is selling at higher levels. Nifty IT, despite Friday's rally, again this is a red bar. Nifty FMCG, these are all weekly charts to get a sense of what is happening. Again, Nifty FMCG, you can see, is trending on the downside. Nifty commodity strong downside bar despite whatever rally you had on Friday. So if you look at all of these charts, they are not looking good. Now let me also take you through the top 10 heavyweights on the Nifty. ITC as usual, it is going nowhere. This is Britannia. See how it is collapsing down. Karnataka, Kotak Mahindra Bank, strong downside almost at the 200-week moving average. HUL, nothing, basically sideways. ICICI Bank, again on a weekly basis, it is coming down, although slowly. HDFC Bank, again big red green bar. TCS still holding on, I would say, but Infosys looks strong. HDFC Bank again finds resistance consistently at this 1150 zone. And Reliance Industries, after many weeks, again is giving up ground and slowly is trying to take this green bar out, although there is some news, some General Atlantic and TPG, etc., investing more money. But I don't think this is going to impact RIL in the manner that it used to earlier. So with all of this said, now let's look at the daily pivots on the Nifty. The floor pivot is 10,992. Support comes in at 10,930, 10,990. Resistance comes at that 11,110 to about 11,170. On weekly Bank Nifty pivot is, on the daily Bank Nifty pivot is 2825. Support zone is at 2633 to about 2808. And the resistance is at 21,156 to about 21,231. On weekly, the Nifty pivot is at 11,131 to about 11,172. The R1 is fairly wide. The weekly range is 10,710 to about 11,472. Very wide pivots. So next week, a lot of time could be spent sideways. What we need to look for is rejection. Weekly pivot on Bank Nifty is 21,162. And again, we need to see how much longer we are able to spend across this. See, the Nifty monthly pivot is 11,352. Bank Nifty monthly pivot is 23,346. So still well below the monthly pivots. So overall, the view, the sense seems to be that we are in a downtrend. This sort of, short covering rally looks very nice, but difficult to see how it can continue given the quantum and the rapidity of the fall last week. On individual stocks, I think there are certain stocks which are going upside. So for next week, the first stock we are looking at is Varroc Engineering. Strong upside. comes down to its 200, again restarts its rally on the upside. So fairly easy to make a trade out of this. This is your stop. You can have a target somewhere here. Okay. The next stock we have is Muthoot Finance. This is one of my favorite stocks, which has corrected quite sharply, and from here is showing fresh upside. Stop below 200 and a rally back to the recent highs is easily possible. Although dollar index is not a good friend of gold, but the stock has corrected so much that this is offering a good risk reward. Then we have something like JSPL. Again corrected to almost its 200. So out here you could have some upside, stop below 200 and can get back to recent highs. So nice risk reward in play. Then we have something like Prestige Estate. Prestige Estate has found repeated support in this zone. So again, from here risk reward is favorable. You could have a stop at about these levels and look for target somewhere here. And finally, we have a Motherson. Again, sharp downside, support at 200, can get back to these highs. So again, these are few trades that you people can look at, but overall, I think the message is very clear that unless the market proves otherwise, we should be looking at this kind of rally to be a pullback. Now you see the neckline, the 8 period, the 20 period, the 50 period, everything is coinciding in this zone about, you know, you can say all the way from 11,100 to 200. So as long as we are below these averages, you shouldn't be looking at a great amount of upside. So you are looking for failure as the price rallies. We look at the length of these downswings and look at the length of these upswings. So it's very clear what is the Bank Nifty doing. Massive downswing, flat upswing, again downswing. So again, unless the upswing becomes larger in size than the downswing, it will be difficult for anybody to say that the downside is over. 50% of this downswing, which is 11,600 high, then 800 low, to about 11,200. So again and again, this 11,200, 250 zone is coming in. So that appears to be the extent to which the market can rally and then resume its decline. At some point, you know, another head and shoulder can be drawn, which could be this one here. Early days, but even this one here can be seen as a bearish pattern if the market starts to reject again on the downside. So, we'll have to see how this develops, but for the moment, this does not look like a sustainable upside. Similar charts, on the S&P, I don't think we discussed the weekly chart there. 4 weeks down, okay, and again, there has been a pullback, but nothing significant. Nasdaq, again, upside uh, weekly, but still not convincing enough to tell you that a bottom has been hammered in. So that should be it. What's important is that everything is a view. Take it as a view and know at what point the view stops working. 10,800 may be the bottom. Right now, I would say there is a 70-30 chance that it is not the bottom. And we start with that thesis and see how that thesis works out. So that should be it for this week. We'll come out with a updation of the trade plan tomorrow morning. I hope you all have a great weekend.